Ladies and gentlemen, good day and welcome to Q2 FY25 earnings conference call of Inox Wind, hosted by Motilal Oswal Financial Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Nigam from Motilal Oswal Financial Services. Thank you and over to you.
Yeah, thank you so much. Good evening, everyone, and welcome to the Q2 FY25 earnings call of Inox Wind Limited. For today's call, we have with us Mr. Devansh Jain, Executive Director, Inox GFL Group, Mr. Kailash Tarachandani, Group CEO, Inox Wind Limited, Mr. Akhil Jindal, Group CFO, Inox GFL Group, Mr. Rahul Runka, CFO, Inox Wind, and other senior members of the management. I would now hand over to the management for their initial remarks, after which we will open the floor for the Q&A session. Thank you.
Sir, you're not audible. Management team, I believe you are on mute mode.
Audible?
Yes. Please go ahead.
Thanks a lot. Good evening all. Thank you for joining today's conference call. I will take you through some of the key financials for the quarter. Inox Wind Limited announced its results at its board meeting held today, Friday 25th October 2024. The results along with the earnings presentation and press release are available on the stock exchanges as well as on our website. For the quarter on consolidated basis, Inox Wind Limited has reported revenue of rupees 742 crores in Q2 FY25 versus rupees 384 crores in Q2 FY24, an increase of 93% YOY. EBITDA of rupees 189 crores in Q2 FY25 versus rupees 70 crores in Q2 FY24, an increase of 171% YOY. Profit after tax of rupees 90 crores in Q2 FY25 versus loss after tax of rupees 27 crores in Q2 FY24. Cash profit of rupees 138 crores in Q2 FY25 versus rupees 1 crore in Q2 FY24. With Q2 financial performance being the highest in past 8 years, we are on course for achieving our financial targets for FY25. Further, I am pleased to inform you that Inox Wind Limited has turned net cash as of 30th September 2024. You can refer to slide number 22 of our investor presentation for the detailed breakup. While the interest expense has been reducing continuously over the past few quarters, I expect it to reduce substantially going ahead since the fundraised money came into Inox Wind in the middle of the quarter gone by, and there were a few one-time expenses related to consortium formation, etc. Further, in H1 FY25, Inox Wind Limited has delivered positive operational cash flows. In September, Inox Wind achieved another milestone as we signed a consortium agreement with banks for rupees 2,200 crores, which are largely non-fund-based limits with BGNLCs. These limits have been sanctioned on the financial strength of IWM's balance sheet and without the requirement of any corporate guarantees or any other support from Gujarat Fluorochemical Limited. I would now like to hand over the floor to our CEO, Mr. Kailash Tarachandani, for his remarks. Thanks.
Thanks, Rahul. The quarter gone by has been yet another where we have continued our upward growth trajectory. Our profits have zoomed to rupees 90 crores for the quarter. I am especially pleased that on the back of the tremendous effort put by our team over the past 2 years, our balance sheet has now become net cash and we have delivered positive operational cash flow in H1 FY2025, which is bound to significantly increase going ahead. We have been able to maintain our execution at 140 megawatt during this period, despite the typical seasonal monsoon challenges faced during the quarter. On the back of our strong performance in the first half of FY25, I believe we are on course to achieve our targets for the full financial year. We are rapidly scaling up our execution, backed by our largest ever order book of 3.3 gigawatt, having added around 1.2 gigawatt of orders till date in the current financial year. Our order pipeline is extremely strong as we continue to engage in active negotiation and bids across multiple FEPs, PSUs, and C&I customers, both new and existing. In fact, with a large current order book and the strong anticipated order inflows over the coming months, we expect our execution to be higher than our current guidance of 1200 megawatt. However, we are currently maintaining our execution guidance. There are several aspects coming into play, factoring which we expect our margins to be higher than our guidance of 15% in FY25. Our royalty payments for our 3 megawatt wind turbine will stop after FY25, resulting in immediate addition to our bottom line. Our backward integration activities, which includes in-house cranes and manufacturing of few critical components, will further add to our margins. We are also working on the launch of our 4x megawatt turbine as well as larger blades on our 3 megawatt turbine. Factoring in all the gains, we expect our margins to improve by around 200 basis points from 15% to 17%. Finally, a brief overview on the macro outlook, which continues to be highly favorable. In the current financial year, around 12 gigawatt of new wind, hybrid, FDRE tenders have been awarded. Tariff continues to be very competitive, ranging at around rupees 3.3 per unit for wind solar hybrid, rupees 3.6 to 3.68 per unit for plain vanilla wind, and rupees 4.37 per unit for FDRE projects in the recent auction. Demand from the C&I segment, which is over and above these figures, has continued to gain pace. I would now like to open up the floor for the question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take a first question from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Hi. Good evening, sir, and congratulations on a very good set of numbers.
Sir, can you use your handset?
Yeah, I'm using my handset. Am I clear now?
Can you speak a bit louder, please? Yeah.
Yeah, sir.
Good
evening, sir, and congratulations on a very good set of numbers. My first question is on the sir, you just said the royalty will stop at 3 megawatt. Can you please quantify the impact? And is it right to assume, is it fair to assume that this will start contributing from F26, right? That's what I think you alluded.
Is your question, do royalty stop now? Sorry, Mohit, can you just be a little louder, clearer?
I mentioned that royalty on ECS will stop for 3 megawatt turbines. Is it possible to quantify the impact?
Well, I think it's going to be close to about, should be about 6 lakh rupees a megawatt from the coming financial year.
6 lakhs, right?
Roughly 6 lakhs a megawatt from the coming financial year. Increment to our profitability.
Understood, sir. My second question is on of course, we have a large order book. How are you ramping up? How are you shaping up to execute a very largish order execution in H2? I think our target should be H2, given that we have done 280 megawatt. It's a very sizable number. So do we have the capability? Have we been able to ramp up, build up the sites, or worked on or hire?
I think, Mohit, it's fundamental to 5 functions. I think we spoke about that. We focused the past 6 quarters on setting right the balance sheet, the capital, getting our banking lines in shape. As you know, over the quarter, we've become net cash. As you know, over the quarter, all corporate guarantees have fallen off after 7 years. The other 2 elements are supply chain. Our supply chain is currently ready for 1 gigawatts. We should be ready for 2 gigawatts by end of this year. In terms of sites, we have about 2 gigawatts of sites available on a plug-and-play basis. Naturally, in the monsoon period, you're not really going to be ramping up execution. In fact, it's a great job done by the team that we've done about 140 megawatts in peak monsoon when Gujarat has been really, really bad this year. So I think those are the four pieces. As you rightly mentioned, our order book is huge, as Kailash already mentioned. There are so many discussions going on. Frankly, that's the least of our worries. So I think if you look at it quarter on quarter, there's almost 25% growth in a peak monsoon quarter. Year on year, there's a 90% growth. I think our company is well geared for the mega ramp up or the mega play which we have. In fact, not just this, we're gearing up for 2 gigawatts in FY27.
My last question is on can you help us with the timeline for Resco business when we can see a significant contribution? I'm talking mainly about new businesses, cranes, transformers.
I think that's going to play out over the course of the year. I would not share micro details at this point in time. I think we're sharing consolidated numbers at this point in time. I think that's more relevant. Even Resco is a part of Inox Wind at this point in time. It will get demerged subject to board approval sometime next year. So, frankly speaking, at this point in time, we're simply guiding for consolidated margins. As Kailash already mentioned and as Rahul mentioned, we've upped guidances from 15% to 17% on this call with the caveat that there's further upside possible as we keep moving forward quarter on quarter.
Understood. Thank you and all the best. Thank you.
Thank you, Mohit. Thank you.
Thank you. We'll take our next question from the line of Shweta Dikshit from Systematics Group. Please go ahead.
Hi, good evening. Is my audio clear?
Yes, please go ahead.
Hi, congratulations on a good set of numbers. Could you throw some light on what has, contributed to the EBITDA margins during the quarter? And what is, I understand the annual guidance increased by 200 basis points. That's for FY26 or this year?
So, firstly, on your question on the margins, so our expectation of the 200 bips increase in the overall annual margin is for FY25, and it's slightly higher for FY26. But at this point of time, we are maintaining at 17%. Now, on your question on the higher EBITDA margins during the first half specifically is because it's been more of supplies of the turbines rather than the EPC work, which was a bit hampered due to the monsoon season being there in the second quarter. From second half onwards, you will see the margins being a bit moderated because we'll be doing a much larger EPC and the revenues from that also will flow, which will be a lesser margin business compared to our supplies of the turbine.
So overall, our realizations can be better in the next 2 quarters, but margins will moderately fall down. But still, what kind of...
For the full year, we've upgraded guidances for margins. In any case, for the full year, we guided for about 15%. So we are upgrading guidances to 17% for the full financial year.
And our execution guidance is maintained at 800 megawatts?
It is at 800 megawatts with the caveat that there's a further upside to the next year's guidance.
All right. Another question was on the management briefly spoke about adding larger winds, larger turbine blades to the 3 megawatt WTG. Could you please elaborate on that?
We are working on that for my 4X turbine, which we talked about. The engineering part is done. We have actually ordered some components of the prototype also. So we will be going ahead with all the certification, etc., early next year, and possibly starting the commercial production in the later half of FY25-26 or the beginning of calendar 26.
Okay. If I would squeeze in one more last question, that would be around what's the composition of 2 megawatt turbines in the order book right now, or is there any residual execution? Or are we completely...
It's largely right now all the order book is mainly 3 megawatt and very small portion of 2 megawatt is less, 7-8% hardly. So rest is all 3 megawatt.
All right. That's it from me. Thank you.
Thank you. Next question is from the line of Aniket Nikum from AFL Capital. Please go ahead.
Hello.
Mr. Nikum?
Hello.
Yeah, please go ahead.
Yeah, congratulations on a great set of numbers, sir. I just had one quick question. Can you give us an update on the merger between IWEL and Inox Wind? I believe there was a final hearing or something scheduled today. if you can share what's the
Yeah. So for today, actually, the meeting has been scheduled for the next 1 week. So maybe by 8th or 9th, again, the hearing will happen and we'll be able to know the outcome of it. But we feel that within 1 month, we should be able to get some good news.
Perfect. Thanks and congratulations and all the best.
Thank you. We have our next question from the line of Preet Nagarsheth from Wealth Finvisor. Please go ahead.
Yeah, hi. Congratulations. Wonderful numbers and fantastic execution. Just one question, a couple of questions, Devansh. One is on the order book. When do you see the PSU side of order flows that would start kicking in?
Thank you, Sir Sumit. It's interesting you asked when we see more of the PSUs kicking in. The last year, the questions we were facing was we have only PSUs. We went out and diversified across C&I. Having said that, Kailash will give more insight. But frankly, we're working with, there's so many PSU tenders out there in which we are participating, will be participating. There are lots of C&I deals and larger IPP deals going on. Frankly speaking, we're now no longer fixated to any one category of customers. And I think there are at least 10 or 12 very large discussions going on. So I think as we keep moving forward, we keep announcing deals across the spectrum.
Right. Okay. So Devansh, what kind of order book addition do you anticipate from here till the end of the year? Is it possible to give any kind of guidance on that?
No, I don't think we should get into that. I think we're very clear. What we've guided for is that FY27, we're targeting a 2 gigawatt play. And as I've said multiple times, what happens in the industry is the peak order book you could have, which is executable. And I'm not talking of paper LOIs, unlike some of our peers who have multi-gigawatt orders with less than 10% executed on the ground. We believe in firm orders and credible companies and parties with whom you can Google, you can check up, you can look at the board of directors, their financial capabilities. And to that extent, I think 24 months would be peak. So I would expect that at that point in time, if you're going a 2 gigawatt way, a 4 gigawatt order book would be very large. We already sit on a 3.3 gigawatt order book. So I think we're very, very solidly placed on the order side.
Great. One other question, Devansh, was that one of your other peers, the international one, is coming up with a 5 megawatt platform for next year. What are your thoughts on that? And are you also planning to have a 5 megawatt followed after the 4 one?
Look, what's important for us is cost of energy. We are not driven by nomenclature of turbines or 6 megawatt or 8 megawatt or 20 megawatt and 30 megawatt turbines. India is a class 3 site, a low wind site. And to that extent, if we can launch larger blades on our 2 megawatt product or our 3 megawatt product, that would be far more cost efficient than any other larger turbine. Having said that, the product which we have, which is 4X, which is virtually 4.5, 5 megawatt turbine, is got one of the largest rotor diameters in the industry, with the potential to add larger rotor diameters. So to that extent, I don't see a product above that which we need to launch in the near future. But yes, we have access to enough technologies. As we feel it's appropriate, we will bring them to the market.
Great. And any insights or updates on the Siemens business? Any color on that Inox may be going for it or something like that?
So I don't think I would like to talk about that publicly. What I've read in the news is there are some people looking at it. Yes, we have evaluated that. But we have a very, very prudent capital allocation policy. No matter how much cash we have, ability to raise, no matter how much cash we raise, we're not going to stretch ourselves. We're going to be very, very cautious. I think organically we can build this business out phenomenally on the manufacturing side. On the O&M side, we have created tremendous value in iFox. We've made a strategic investment in another potential acquisition. I think that's more important for us. Our financial metrics typically remain 4 to 6 times. We are not competing with people to buy companies at 30 times, 40 times, 50 times. That's not something which is the ethos of the Inox GFL group. And I think we are on a very, very strong growth wicket, both in wind and green. And I think we should be able to create enough value across that.
Right. Brilliant. Thank you so much and wishing you guys all the very best.
Thank you, Preet.
Thank you. We'll take our next question from the line of Raj Kumar from Finvestors. Please go ahead.
So congratulations on the good set of numbers. So my question is, in one of the interview I followed you on media, and in your last Concall also, you said that FY26 guidance of 1200 megawatt will have an upside risk. So do you want to quantify that upside potential?
No, we will not be quantifying that. We've just said that we have an upside risk. What we've done at this point in time is we've upgraded guidances for this year from 15% to 17%.
Sure. And so next year, this year, what could be the realization per megawatt? I think 6 crore per megawatt was what was said in the last some con calls. So what I'm seeing in last 2 quarter results, that the realization per megawatt is slightly lower.
Yeah, so as we had explained in the previous participant's question as well, that in the first half, there was more of supplies of the turbines rather than the EPC. So the realization of EPC did not happen, which will happen in the second half. So you will see our overall per megawatt realization moving closer to the 6 crore per megawatt figure which you have.
Okay, sir. And do you see any risk in achieving what we have guided for, sir, for this year or next year? Any risk?
No, we don't see per se as such any risk. The way wind sector right now is going on is very positive. I think lots of customers are also getting ready with their own development. We are ready with our own development with the pipeline, as Devansh also highlighted earlier. So don't see per se any risk and with respect to demand or with respect to execution.
Yeah. Okay. Thank you. Thank you, sir.
Thank you. We have our next question from the line of Nidhi Shah from ICICI Securities. Please go ahead.
Hi. Thank you so much for taking
we cannot hear you, ma'am.
Hello, am I audible now?
Yes, please go ahead.
Yes. Thank you so much for taking my question. I just had one on the lower interest that we're seeing this quarter. So is this something that we would see for the rest of the year as well?
Can you please repeat the question, Nidhi?
So we are seeing a much lower interest payment this quarter as compared to the previous one. Is this something that we could expect for the year going forward as well? For the remaining 2 quarters?
Yeah, thank you. You have already, like we mentioned that we have become the net cash company now. So going forward, we'll have like only BG insurance charges or the LC insurance charges kind of expenses in our profit and loss. And per se, there will be finance cost, but not the interest expenses. And that also will be offset by our earnings from the investment and our surplus cash. So
drastically reduce.
Yeah.
Interest cost should drastically reduce every quarter. So we become positive interest earning.
Yeah.
Okay. Thank you so much.
Thank you. We'll take our next question from the line of Abhishek Nigam from Motilal Oswal. Please go ahead.
Yeah, hi. Thank you so much for the opportunity. Just wanted to check, how are you thinking for, beyond FY27 and now that you are net cash, there is no cash getting generated. So, what is the plan for excess cash? So that is my first question.
Abhishek, let's get there. As I've said publicly, what I've said in many of the investor meetings, we will be very cautious. We are growing massively. So while it's caution, but we're growing massively. So we've gone from 400 to 800 to 1200 to say 2 gigawatt. Let's see how the market plays out. If it's going to be a 10 gigawatt market, we're going to be far larger than 2 gigawatt. So we're not holding back on 2 gigawatt, number one. Number two, we would carry cash at all points in time equivalent to at least a quarter of outflows for us. So let's create that. Let's be there. Once we have that, we would have a dividend policy in place. We have that across most of our group companies. And I'm sure the board of Inox will also at the appropriate time decide a dividend policy. As you may notice, we are also strategically backward integrating into low-hanging fruits, high-margin businesses. We've gone into cranes, We're doing value addition through trafos and other similar measures. But we are very prudent in capital allocation. So some of the new plants we're building out are on lease. It's cheaper to lease them than build them. The interest saving is more than just leasing them. So, we would like to be in a position where there's a lot of cash on the balance sheet. I think that's what we're looking forward to. And then we'll see what needs to be done thereafter.
Fair enough. And how should we factor in the interest expense going forward?
I think that's going to come down drastically, and it's come down drastically every quarter. Q3 should be sharply down from even Q2, and I would assume by Q4 should be virtually zero, if not net earnings. Right.
Fair enough. Just one last one from me. So, you talked about the consortium. So, how does that help in terms of working capital and other charges? So, any color on that would be very helpful.
Ladies and gentlemen, we've lost the management connection. Please stay connected while we reconnect them. Ladies and gentlemen, we have the management team back on call.
I think the question was with respect to the consortium formation. So, as you must have noted in our press release, the consortium is all there without any corporate guarantee, without any collateral from any of our group company. And to that extent, it means that the company has been, well accepted in the banking community now. And as and when as Katie mentioned, there would be more and more business coming up. We'll keep on adding more and more limits and more banks in this relationship. So to that extent, the need of the company for efficient working capital management will be always maintained. And to that extent, we'll of course bring down the working capital cycle as efficiently as possible. And naturally, it will also help us in interest and banking charges reduction.
Yeah, that's very helpful, very clear. Thank you so much.
Thank you.
Thank you. We'll take our next question from the line of Harshil Shetia from the Renaissance Investment. Please go ahead.
So what kind of capex are you planning in FY25 and 26?
So the capex will primarily be on the molds which we are purchasing for our larger blades. That's around 50 to 75 crores for both the years.
So both the years included is 75 crores.
Per annum.
Per annum. And maintenance capex?
That's roughly around 10 odd crores. It's included in this number.
Okay, included in this number. Okay, thank you.
Thank you. We have our next question from the line of Chandan Mishra from Finvestors. Please go ahead.
First of all, I want to congratulate you on your good set of numbers, sir. And my all questions have answered, sir.
Thank you.
Thank you. We'll take our next question from the line of Utkarsh Somaiya from India. Please go ahead.
Hi, thank you for the opportunity. I just wanted to ask you about your tax rate. So I think you mentioned earlier that it's going to be nil for FY25 and 26. Can you please confirm that?
Yeah, it would be a nil for FY25 and FY26 broadly. We have a lot of losses.
Sorry, sir, you're not clearly audible. Can you repeat that, please?
That's correct. Your understanding is correct. Yeah.
And for FY27?
The tax rate would be 25%.
For FY27, okay. And just to confirm, and sorry to be repetitive, that for FY26, you plan to execute 1200 megawatt at 6 crore per megawatt with a 17% EBITDA margin. Is that right?
Roughly, that's right. 6 crores approximately, that's right.
And net of other income and interest, we'll have zero outflow, right?
Yes.
On the tax side, yes.
Okay. Thank you so much and good luck with the execution.
Thank you.
Thank you. Before we take the next question, we'd like to remind participants to press star and 1 to ask a question. Next question is from the line of Alisha Mahavla from Envision Capital. Please go ahead.
Hi, sir. Good evening. Thank you.
Ma'am, we can't hear you. Please use your handset mode.
Am I audible now?
A little better. Can you use your handset mode, please, and speak a bit louder?
Sure. I hope this is audible.
Yes. Please go ahead.
Yeah. Thank you for the opportunity and congratulations on a great set of numbers. Just would like some color on the competitive intensity, because what we're reading is that some Chinese players are becoming competitive again and maybe setting up more capacity. While we do understand that there is ample demand and work for everybody, very soon it can turn into maybe aggressive pricing and impact on margins. So your thoughts on that will be helpful.
Look, let's try and understand. First and foremost, there's space for at least 5 large players. Currently, we're down to 2 or 3 players in the Indian market. Having said that, more than 50% of the Indian market requires turnkey. The Europeans, the Chinese are not party to that. They don't have the execution capability. They don't have access to sites. They don't have land banks. They don't have connectivity. So they're effectively out of that. That's really a duopoly, that market, 50% of the Indian market. The remaining 50% is equipment supply. Now, in equipment supply, effectively, currently we've had umpteen Chinese come in, so far less than 1% of market share. We've had a new player come up 2, 3, 4 years ago who's executed about 1,200 on the ground today, which would be about 3% of the market. From what we understand in terms of pricing, we're as competitive, probably more competitive than him. People may announce newer products, newer plants, doesn't matter. We are bringing out the right products which are relevant for the Indian market, where the cost of energy is the lowest. There's no point taking out a 5 megawatt turbine with a 160 rotor, when on a 4 megawatt you can take out a 180 rotor. That's going to be lower in terms of cost of energy. Number 1. Number 2, setting up new capacities is the least of issues. We have a 2.5 gigawatt pipeline, manufacturing capacity, We're setting up new plants to gear up for more growth, for non-uniform growth. We're locating plants strategically to reduce the cost of logistics. And I think to that extent we are very solidly placed. Don't forget, we also have domestic content requirement kicking in the wind industry, thanks to the guidance from Niti Aayog. So effectively what's happening is if you're going to be competing on A-grade quality, then we're on par or far better than anybody else. We're not really looking at competing for C-grade quality orders or C-grade customers. And to that extent, certain players are more than welcome to pick those orders up.
And are we seeing, say, large corporates maybe thinking of setting up own capacity and then just outsourcing the turnkey work? And in that case,
I don't think so. Barring 1 or 2 corporates, I don't think anybody's doing that. We're in discussions with most of the large corporates. It's a very complex business. This is not a solar module manufacturing business where you can set it up in 6 months. We're doing that in the group as well for our captive requirements. Wind is complex. The supply chain is rocket science, if I may say so. Certification processes are 2 years. So, it sounds very easy. One of the large guys in India did announce this in 2019. They, in fact, launched their turbine in 2023. Another guy supposedly announced a very large wind foray in 18, did not move until 23. It's probably going to be 2 years out before they move. And the product they plan to launch is outdated by the time they launch that. So effectively, I think we've built a very, very strong moat in the wind business. It's not something which you can replace just with money.
Understood. And is it right to assume that 100% of our supply chain is domestic?
No, we don't have 100% of our supply chain. We've never assumed that. We've never said that. We have a global mix between India, China, Europe, Korea. We are in compliance with all the laws. I will not disclose the exact percentage at this point in time, but given whatever guidances have come in from Niti Aayog, we are fully in compliance with that, capable of doing much more. But we leverage our global supply chain to take advantage of the lowest cost products as and when we need them at the right quality.
Understood. And just one last question on your balance sheet. In your opening comments, it was mentioned that you just spent last 6 quarters in, strengthening the balance sheet and repaying debt and strengthening the cash flows. When should we see the cash conversion cycle going from here? Is there scope for any improvement? Is there an ideal target that we want in terms of inventory or debtors? What would be the roadmap for that?
You've been seeing this for the past 6 quarters. Our cycle is only improving quarter on quarter on quarter. we've turned net cash positive. From operations itself, we've turned cash positive. And I think we've done this after 7.5 years. I would give kudos to the team for doing a phenomenal job. We are walking the talk. We're in fact beating every guidance we're giving out in the market for the past 6 quarters. So I'm surprised you ask when we see cash flow. Having said that, we've also stated we expect significant free cash flows to increase as we get into quarter 3 and quarter 4.
Sorry, my question is not on cash flows, on the cash conversion cycle, your working capital cycle.
Our working capital cycle has continuously come down. So if you look at 2 years ago, we were probably at 1,000 days. We're now down to sub 200 days. We've publicly guided for 90 days of working capital at the end of this financial year, once we get a full financial year. And we're very well on track to do that. I think, in fact, we're ahead of the curve in getting to that target.
Understood. Great. Thank you and all the best.
Thank you, Risha.
Thank you. We have our next question from the line of Ketan Panchal, an individual investor. Please go ahead.
Hello, Deva. My name is Ketan Panchal. I have invested all my money.
Use your handset mode, please. Your voice is not very clear.
Hello, Deva. My name is Ketan Panchal. I have invested all my money in Inox. I'm very happy with your execution. I'm hoping to be financially free soon on this investment. I just want to say thank you.
Thank you. God willing, we'll create more value for you.
Thank you.
Thank you.
We have a next question from the line of Anuj Upadhyay from Investec. Please go ahead.
Yeah, hi. Thanks for the opportunity and congrats on a good set of numbers. My question basically relates to the restructuring across the RESCO. When would the asset get transferred to the RESCO, that is the substations, and when do we plan to procure the cranes and put to the commercial use?
So based upon the board approval, that will be get transferred within next 1 year or so. And the crane business we have already get started. The ordering has been done, and now that crane business will start soon in this entity.
Okay. Any broad number which you can share? How much would that? How much crane we plan to procure, and how much contribution would it have at the top line and at a margin or EBITDA level at a console entity?
So broadly, we cannot give a specific details, but that will add, the margins which is made by many of the crane vendors. We are taking the crane from the various vendors. Some of them are listed as well. So that is available in the public domain. We will able to save that of much cost in our, and that will immediately add in our EBITDA margin.
Got it. And this could be used for the third party as well, right? It's not purely for a captive.
Broadly, it is for the captive consumption, but the spearhead capacity which we will develop will be used for the third party as well.
Thank you. That's useful.
Thank you. We'll take our next question from the line of Pratik Giri from Shubh Labh Research. Please go ahead.
Hi, Devansh. Am I audible?
Yes.
Yes, you are. Please go ahead.
Yeah. So my question is to Kailash. Kailash, I just wanted to understand regarding our top-line profile and margin profile. So what I can see is in H1 FY25, we have done around 1,370 crore of revenue with 23% EBITDA margin. Now, when we say that in next 2 quarters, we'll be increasing the EPC revenue, which is actually high margin than turbine supply business, turbine supply revenue. So I'm sure I'm correcting something to this.
I'll just cut you on there. You're incorrect on that. EPC business is a much lower margin business compared to our equipment supply business.
Got it. And in terms of top line, it's bulkier than turbine supply, is it?
No. So broadly, out of the 6 crore per megawatt, 1 to 1.5 crores is related to EPC.
So around 20 to 25% maximum.
Yeah.
Got it. So in next half, we'll be executing around 500 megawatts of business, and as per the thumb rule of 6 crore per megawatt, we'll be hitting around 4,800 crore of revenue. Is that understanding correct?
Broadly, yes. Because based upon our guidance, 800 megawatt of execution, 6 crore, you can consider 6 crore rupees per megawatt.
Some will be all commissioning at the same time.
Yeah. So, but there might be some timing difference for the commissioning. So plus minus 10-15%, your understanding are correct.
Okay, so going ahead, realization per megawatt should increase and margin should also, realization per megawatt should increase and margin should decrease, correct?
Yes. Yes.
That's it from my
side. We have already given the guidance for the full year, which is around 17%. So that will fall in place accordingly. So might be in some quarter it would be higher, in some quarter, it would be compared to in line with 15-16%. So we need to see the, whole year guidance of 17%.
Which we've upgraded to 17%. Yeah. It was 15, which we've upgraded now to 17%.
Understandable. I have one request to make, Devansh, if you can share the order pipeline. I'm
sorry, we will not be able to share that. We appreciate, but for competitive reasons, that's not possible to share. We are talking to the largest PSUs, we're talking to the largest IPPs. I think you need to leave certain things to the management. We can't put everything out in the public domain.
Understandable. Congratulations on good set of numbers. Thanks for taking my question.
Thank you. We'll take our next question from the line of Krupa Desai from Electrum Capital. Please go ahead.
Hi, sir. Firstly, congratulations on good set of numbers. So my question was, so currently India is lagging behind the power evacuation infrastructure because of mainly transmission delays. I know we have a very good order book, but do you think because of this issue, newer capacity executions could delay or get impacted?
No, currently, the moment we are talking about, as we said, we have a project development pipeline, and we know where we have our own connectivities or where customers have their own connectivities. Most of these guidance which we have given for next 1 or 2 years, we already have our own substation and infra ready, where it is mostly plug and play. So don't see that becoming an obstacle or hindrance in terms of execution. But as we go, even for the future, we continue to develop our pipeline ahead of time.
I think that's very important. And just to add to Kailash, unlike, you could have a quarter here or there, but unlike some of our competitors, we are building the pipeline ahead of schedule. So you're not taking an order and then suddenly saying, oh, we are 1 year behind, oh, the connectivity doesn't exist. We are saying what we believe we will do where connectivity exists or where it's in final stages of happening. It's not something which could be 1 year away. It could be a quarter here or there. So I think to that extent, we have a very strong project pipeline and a good mix of turnkey and equipment supply.
Okay, got it, sir. Thank you for taking my question.
Thank you. We'll take our next question from the line of Pawan from Geojit PMS. Please go ahead.
Yeah, hi team. Congratulations from my side as well. Just one question. So all the orders that we are discussing as of now, they are for FY27 and beyond in terms of deliveries, or are we discussing something for FY26 as well as of now?
Sorry, we could not hear you. Can you repeat, please?
I'm saying all the new order flow discussion that we are having with our clients now, they are for FY27 deliveries, FY27 and beyond in terms of deliveries, or are we discussing anything for FY26 as well?
Primarily FY27 and beyond, but it depends. We have the flexibility to play for 200-300 megawatts for, depends, it's something frankly relevant. But yes, we are really looking at FY27 onwards.
Yeah, currently the kind of orders we have, it's a mix in terms of execution. Some of them to be executed in less than 1 year, some of them to be executed 2 years. So we have some flexibility available in quarters. So depending upon customer relationship, client requirement, we are mixing it up well. And some of them could be execution in less than 18 months, but mostly could go beyond 18 months as such.
So essentially what I'm trying to understand is that when we say 1,200 megawatt of guidance for next financial year and possibly upsiders to that, are those orders already in the bag, or we are still out there to...
No, we already have an order book of 3.3 gigawatts. So to that extent, if you're doing 1,200 this year, 800 this year, and if you're doing broadly 1,200 next year, we already have the entire order pipeline visible for FY26.
Okay. Great, Devansh, and congratulations once again. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, we'll take that as the last question for today. On behalf of Motilal Oswal Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your line.